What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. So if that sounds like something you're interested in, consider subscribing, as I do current events on this channel as well. And I also do daily memos on Twitter via Hemi at 137. You can catch me there doing a daily update there as well. I also do have a blog now, so check that out in the description below. But before we get started, go ahead and drop a thumbs up and we can get rocking and rolling. Now, yes, there is a new screen here. I am trying TradingView a little bit. I have tried TradingView in the past. I do like their charts better, but ultimately, I have been using TD Ameritrade for the most part. That's why the screen is very different today. So if you do like this one, definitely drop a thumbs up. And if I get enough thumbs up, I'll switch over here to TradingView, that we can get a clear picture of what's actually going on here. Now being said, this week has been very interesting, and what won't change is that I'm going to go ahead and pull up this so that everybody can see what is currently going on here. We're going to go over the weekly recap. Again, we just came over two of the biggest weeks after this week. This week closed out with a bang. There's a lot of information that we need to digest. It's essentially happened over the past 3 weeks. Now, earnings is not over. I want to make that perfectly clear. Earnings will continue to go on to the end of the quarter. But as far as the impactful earnings have essentially happened already. From this point on, it's mainly just about events until the next core CPI and next monetary policy. But before we get ahead with that, let's go over the past week. Now, the past week has been a very big week. We had Apple earnings, which holds 7% of the index. We had monetary policy, we had Powell, we had Nonfarms. Those were the three big events we were looking at this week. Now let's dive into essentially what happened. So Apple earnings, their expectations, they did beat. Their revenues also did barely beat. You have to also understand that they have still been on a decline. That, again, expectations are brought very, very low. You can see since their iPhone revenue has gone way up compared to what was expected. Actually, that is way off. 1 second. Let me double check that. That looks extremely off. Yeah. What do I have here? I have iPhone revenue. Is that right? It should be 43. What is going on, everybody, and welcome to another What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide events videos as well. And I also do have a blog, which you can find in the description below. And I also do provide daily memos on X at Hemi137 if you want to follow me there. Now, this past week has been a huge week, I think, to close out all the big earnings, in my opinion. Again, earnings will continue on for the remainder of the quarter, but the most impactful earnings have essentially happened. The ones that are really going to move the market have occurred, and the market essentially can gather as much information over the past 3 weeks that it needs to make its decision on where it's going. Now, we've had this particular week has been a very, very big event driven. We'd had 3 big events this week. We had Apple earnings, we had monetary policy and Powell, and then we had the non-farms on Friday. So it has been a very, very big week on deck. And if you didn't notice, I do have a new chart up here as well. Oh, let's take that down real quick. I do have a new chart here as well. So just keep that in mind. I am trying TradingView as I've had some technical difficulties with TD Ameritrade this morning. So I might be actually switching here full time and doing it on here. I do like the charts better. I trade a lot on TD Ameritrade. That's why I do a lot of the charting over there, as opposed to having to jump to different charts and having to sync both of those charts up manually is kind of a pain. So nonetheless, technical difficulties. So we are doing it with TradingView this morning. But the same thing as always, we're going to go do a recap of this last week and then essentially go from there. So over the last week, like I said, it was a very impactful week. We had Apple earnings, which expectations they beat, revenues they beat barely. You have to understand, again, expectations are really low. So the fact that they are beating, they're trying to, again, silo this particular quarter with what's going on, which, yes, you should to kind of gauge, but you have to also have that broader perspective of what's actually going on. There's been a huge decline in Apple earnings in a lot of companies in general. The iPhone revenue has actually increased slightly. Their Mac revenue has dropped a lot, as you can see, and that big drop that we talked about on China revenue, they've lost about $2 billion on China revenue because essentially the ban in any government facilities that was essentially expanded to other businesses as well. So they lost some China revenue there, took a big hit there. It'd be interesting to watch. And this is what I think the Fed is actually watching as well, is that they are watching to see what happens this Christmas. Again, it's one of the hugest spending times of the year. People want to know where the consumer is, especially in this given market right now, which we're going to get more into, because I think it's really important to see where they stand. And given all these pencil whip numbers that we talk about all the time, it's not plausible essentially to continue at this rate that they are thinking that we're just going to have a no landing. They keep reiterating about a no landing when everything is pointing into the direction that that's not true. Massive layoffs that aren't being announced on everything. We're starting to see larger scale layoffs again across the board, and not just in tech. Tech is going for another big round of layoffs. But not only that, it's like I said, again, across other industries, which is being very impactful. So Apple earnings, it was okay, right? It's still because expectations low, and there was a lot of concerns about China. This is the impact that we're starting to see, and again, that holds 7% of the index. Though it is recovered some from the sell-off that it originally had. You have to also understand that we are still in a very bad spot, and we are kind of looking over the edge at this point of what could potentially be happening. What I do believe will be happening here very, very shortly. Though I will say this, is that given what has happened over these past couple events over this week that I'm going through, the market started to rally. And the thing is because the market believes that we have officially hit a pause. Now, we've officially been, quote unquote, a pause for about 3 months, 3 monetary policies. And from this point, we're seeing what the damage is doing for higher for longer. So we do want the Fed to try to remain to keep that up as long as possible. We do have one more monetary policy here next month, but what we want to pay attention to is to make sure that core inflation, which is about a week away, is still coming down to that 2% target. And that's what the Fed has also talked about. So let's get into that a little bit. The Federal Reserve rates, again, got paused again. And then, Powell came out still talking about that 2% target rate. And we are about double that right now. So again, it's getting very sticky and very hard for inflation to come down. The full effects of tightening have not yet been felt. This is something we've talked about multiple times. There's a lagging effect that rates have on companies and small businesses as they're waiting for their loans to mature. Once those loans mature, when they have to go out for new business loans and stuff like that, then they're paying these top interest rates, and that's when the businesses just can't afford it. And so that's what they're waiting for. That's what the Fed is waiting for this to continue on, so that essentially these small businesses, which are about 60% of the workforce, is going to crumble because they can't afford these loans, and so people have to get fired. And when people start getting fired, then they start dipping into savings. Then when savings doesn't cover it, then the last thing that's the most biggest prized possession that most people have is their home and the equity in their home. If they have to turn around and sell that, this is why we're talking about the housing impact and a potential crash there is going to be very lagging when it comes to everything. And you have people that are coming out like Kathy Woods, and everybody said, no, it's going to be a soft landing. And then now Kathy Woods is even talking about rolling recessions, and that we've had rolling recessions for a while, and the numbers are reflecting that it's been a while. The labor market remains strong as expected, which is kind of funny to see because it's not, again, the pencil whipping is not giving accurate numbers there. And again, what we've seen when we start talking about non-farms here is that there's been massive revisions on the numbers. We've been declining very steadily and dramatically over the past couple quarters, and to think that we're not, because they pump these numbers up and then they chop them back down like to half of what they are. And then we're seeing in this last non-farm, which was very shocking to see, because what happens when they revise the current numbers? That's the problem. So reduction in inflation likely requires weaker labor force. So they're looking to lay off more people. There's talks about 10%, getting to 10%. And non-farms came in on Friday at that 3.9. So we're almost at 4. Imagine another 6% of unemployment and where that could take us, and the impact that could have. They added 105 jobs in October compared to the 297 jobs in September, but that also was revised because that was like 336. So they're chopping these down quite a bit when you're talking about the non-farms that are coming in. So it'd be very interesting to see when the 105 jobs in October is revised, where it's actually sitting. And so this is the delayed effect we're seeing, and something I talked about when we started getting into the way the market is projecting into essentially tying in the pause, right? Like when that second phase occurs and you get into the pause, it's about a 2 to 3 month. And then at that point, typically what happens is, you start getting cuts at that point. And then from that point, the market will price in a recession. And so that's kind of where we're at. When we're at very key levels, I talked about that coming into this week, and we've since bounced back from this week, and especially Thursday, Friday after Powell, the digestion of that information, that we could officially have hit a pause. It doesn't mean that the market's just going to rally from that. It means that the market is setting up for that next dive down. So I do feel like we will have another revisit of that 4,100. Again, it's a very key level. We blew past the 4,200 like it was butter, and then now it is now support again, which is again quite interesting, because every time we start getting a sell-off, you have to understand that the banks are purposely doing this. The yen, they're purposely, even like the yen has a lot of impact on our markets because they hold a lot of our debt. You have to understand that they are circulating their own money to keep up the yen so that they don't crash. They're doing everything that they can to keep the market. Even China at this point, you have to understand China's already crashed, right? They had a massive crash, and they are doing everything they can to stimulate. But you have to understand that it's the disinflation period in which you have hit that second phase where you're looking for demand to come. You're doing everything you can for demand to come back, but demand doesn't want to come back because you absolutely crush consumer confidence. And that is where we are on essentially the cusp of having that right now. If nothing happens this week, if we don't sell off this week, what's going to happen is I can see us start pushing into the end of the quarter, and then again, looking at the baseline being that roughly around that February time period, we start having a normal sell-off. And that normal sell-off at that point, you have to understand that could be by February, could be where we start getting that recession. We have to also understand that by April is when the Bitcoin halving is. Now, Bitcoin's essentially kind of separated itself from the rest of the market and holding up well, but again, it's still battling that 35K mark. So just keep that in mind. So we got a lot of stuff that came out of this week. Like I said, a lot of this is, again, showing you that what they're telling you is not true, and they're propping this up. They talked about banks, that they don't want people to see what's actually going on with the banks over a year ago. And then not shortly after that, we got the SVB crash, a bunch of other bank crashes. We haven't really heard anything about this particular cycle yet. I think we might have to give it a couple more weeks. I think we'll get some more information at some point over the next couple of weeks about banks. And then we also do have government shutdown. Again, now it really doesn't impact the government as far as the stock markets are concerned that much, but we have to also understand that if the government is shut down at any extended period of time, we're not going to get the data that the Fed is essentially trying to make their moves off of, right? I'm sure they get other data. So this whole conspiracy that maybe it's the likelihood that we're going to get such shocking numbers, I don't know, but we'll see what happens there. Ultimately, I think they're just going to kick the can down the road, at least until after the holidays, and then go from that point. So again, we have to also understand we start getting in a very slow period of time of year. Now, the stock market really doesn't do much. The Christmas rally doesn't happen until you start getting into the January time period. We could start building that up a little bit now, but we have to understand from the end of November till Christmas, it's just really kind of a slow period as we wait to essentially get into that next earnings cycle in January. So that's what we have there this upcoming week. Again, there's a lot of Fed speakers coming out. Powell's actually talking twice this week. He has the opening presentation on Wednesday for the IMF panel. And then on Thursday, he's actually speaking at 2 p.m. Eastern Standard Time. Again, I reiterate, every single time he comes on, you need to be aware of when he's speaking because he moves the markets. This man has more power than any president. To understand, he moves markets. He can actually crush markets. This is why he skates around a lot of questions and try to be very generic about the questions that he does give. Upcoming events, again, the next monetary policy is the 13th. Core is on the 14th, so that's going to be interesting to see if they do increase anything. I think the odds of them increasing anything at the end of the year is very, very unlikely. And again, you don't even have the core until after the fact. So again, I'm expecting them to not really make any kind of moves until after the new year, once they get the full year's earnings statements for Q4. Again, it's a time of year when people are purchasing a lot of things anyway. So if they're not purchasing anything, it's a huge concern, especially with the massive, after we just saw the big reduction in job numbers. They were expecting, I think, like 180, and it came in like 150. So that's unrevised, right? And so once that does get revised, it'll be interesting to watch what does happen there. And then this week, earnings, again, none of these are going to be really impactful like the last couple of weeks that we've really saw with some big hitters. But these are ones I still want to watch. I still want to watch Celsius. That one I want to keep an eye on and kind of see where that's going. Energy drinks are becoming really popular, so I want to keep that on watch. You got Rivian, which I've seen a lot of Rivians, and so I want to kind of keep a little eye on Rivian and kind of see where it's going with the numbers. UPST, again, an AI solution. That's much like SoFi, so kind of watching to see what happens with them on Tuesday. So Tuesday would be a big day, in my opinion, for me. Then you have Roblox and Disney on Wednesday, again, kind of giving you more a pulse of the market. Most of these, anything after this point, are more of a pulse of the market to kind of see what the industries are at. They're not going to move the market, but they'll give you an idea of where those industries are going. Then our expected moves this week. I have to recreate this one. I think it's actually going to be lower than this. This is last week's. Like I said, TD was down, so I'll have to adjust this later on the blog. But as of right now, I think it'll be much lower than 97. There isn't really any big events, any forecasted events, so I think this will come way down. My guess would be roughly around 60. Tesla has come way down. BA has gone up a little bit as there's more traction there. JPM has come way down. So let's start to look at these new charts. I have been posting these charts in the blog because they're easier to see. I know a lot of people like these charts. Like I said, I do like these charts a lot myself, but it's just making that translation between my active accounts and what's actually going on here is just it's too much to sync up. So with that being said, we are looking at SPX. We had a huge rip basically off of Powell. Powell was very hawkish. That there was no way around that. Powell is hawkish. He's very aggressive with his 2% target. If we start raising, that could be a concern. So you have to see why he would say that maybe early next year we could potentially start seeing more interest rate hikes. It really just depends, but they have to see how the demand acts over the Christmas time period to really gauge how we're going to take on 2024. I think it's going to be important, and it's also an election year, so there's that comes into play as well. So there's a lot going on next year in general. So we'll see here. So as of right now, we're currently in this zone, this roughly around this almost that 4,400 mark. Again, we recovered very quickly. It's just a bounce, right? We hit the zone and bounce straight out of it. We need to break back up above that 43.98 and to start potentially trying to go for all-time highs, roughly around that 4,800. We've just missed it by 200, so we've been on a downward spiral. So if we open up lower than that this week, again, it could be a huge problem. I think we could start selling off again, retesting that 4,100. Again, we break that level, we're going to new levels. And so we have to be very careful here is these pumps. We're not just going to pump straight back up to all-time high. This is not going to happen. But these pumps are getting a lot more volatile because of the amount of money that's essentially sloshing around in the system. And so we have to keep that in mind moving forward. Now let's take a quick look at Bitcoin here real fast. Again, Bitcoin's been kind of holding that 35K mark. It really hasn't. It's tried to break out a couple times. You've seen some spikes, but again, if this can't break up above the 35K mark, it's going to be a problem. Like I said, we can even pump up to this 38 mark. But it needs to break out. Technically, it really needs to get above that 40K mark. If it's not breaking above that, I believe this is still going to come crashing down. Yes, I have to, again, also understand that when these moves occur, when you get these breaks, you get a lot of chop before the next move, and then that could be down or up. But as of right now, we'll continue to watch as there's rumors swirling around a potential of the spot ETF being approved by the end of the month. So we'll see if that's true or not. Looking for at least a retest back down here at the 30K mark. The question is will that retest hold or will it could potentially pop up again? The more this gets overextended, it's not a good sign, as that just means that we'll start crashing back down. To build a strong bull structure, you want this to at least retest this breakout and continue to push up naturally. So at least looking for the pullback there, again, roughly around the 30K mark, and see if it goes. If not, the second level, the 25K mark, again, we don't want this back down below here. This breaks this support here and starts coming back in this level, we're going to go even lower. So we need to pay attention to that and watch that going forward. Let's take a look at Tesla. Tesla has been struggling. Like I said, the earnings weren't so hot, so I've been kind of chopping around. Did have quite a bit of a push this week, but again, could potentially try to fill this gap, fill back up to 240. My opinion is just retested the resistance here, which was the support. So this is the first attempt to retest it. So I expect this thing to potentially start selling off even more. So you have to be very careful about how this may play out. Again, very key levels here, roughly breaking back over that 228. And also coming lower and breaking that below the 2. We did break below the 200 briefly. Again, a lower low here. So depending, as long as we don't get higher than the 266 mark, it could be a higher low. We could start heading lower and chopping lower. Again, you have to understand we could very well just getting into a nasty chop cycle. At least getting into that February time period. I think that's where the Fed is aiming. I think every other events between now and then We might get some dramatic. We have to understand that there's a lot of gray swan events that I talk about on this channel that could happen if they cascade, and there's a bunch of them at one time that could have a huge impact, huge ramifications on the market. So those are things you do have to keep in mind and be very careful with. And this is why I talk about risk management and being careful moving forward. Now, Palantir, they absolutely crushed earnings. They gapped up. Again, I could expect this thing to push up to 20. Otherwise, to keep the momentum, if the market starts selling off, it really needs to, again, hold that 18 mark. If it starts to sell past there, again, it's this $14 support has been really strong. We'll continue to watch and see if that's seems to be the case. Again, we've had a huge overextension here. This could just start correcting back down. Again, you get a gap here. You need to fill at some points. Will that happen? Majority of the time it does happen. So we will see if that tends to be the case. Again, we have to see how the general market sentiment is over this next week. And again, if this is a solid week, I would essentially almost expect a solid remainder of the year, and then potentially look at some downfall early next year. So this is why I don't try to project too much into the future, but also understand that right now, again, if the market isn't correct to start pulling back from the move it had on Thursday and Friday, that in itself is essentially just saying that's, the market has moved past everything, and the market's going to start moving forward, at least to the back half of the year, and get into a little bit of that Christmas rally. And then from that point, when they get information on what's actually been reported for the Christmas, this Q4, that we can essentially judge on how the Fed are going to start messing with interest rates next year. I do expect cuts at some points. Again, what we're looking for that event is more so unemployment. I think at this point, non-farms need to come down a lot. And when we start hitting critical levels, whether that's next month or the beginning of next year, I think is really going to matter. I think Powell wants to hold rates to get it to where he wants to, and then start cutting rates early next year. Could be a strong possibility. I think if we were going to really sell off, if we don't do it this week, I think that's it. I think the rest of the year is going to be fine, and we could see some sort of rally in the back half of the year, and then go into next year with potentially some bad moves. So because again, there's not a lot of events. The market gets very stale, or we could potentially just sell back off to this current level, the 4,100 level, and just chop. Okay, it could be a strong possibility. But Palantir, again, a very strong suitor for the future. I think it could be the next Tesla. They are doing very well, especially in this environment. They've been around for a while. It's not like they've just been dabbling in AI for a little bit. They've built their whole business around it, and it does extremely, extremely well. So again, always going to keep this one on watch moving forward. Let's take a look at BA. BA is trying to get some traction back. We'll see. We did get a break, a soft break retest, and now we got a bigger break retest. Again, if we could break back over this 200 mark, we could be back up aiming for that 215. Otherwise, I think this thing is just going to get rejected and start selling off. It needs to hold the 175, and then if it breaks that, again, you got a huge potential fall here down to probably this 140 level. So you can get a pretty big jump back down to essentially cover this massive run up right here. So watching that on BA, again, not expecting a huge move. There's a bigger move expected with BA just because they've the way value has been playing in this massive sell-off here, that it could potentially start selling off a lot more. And JPM is not expected to move a whole lot. Again, we had a break retest. Again, if it can't break back above this 145, it's going to be a problem for JPM, as I think we are trapped back down in this channel. I think we're going to at least revisit the 128. 128 needs to hold, so you're going to get a test, perhaps pop, maybe even back up to here, and then maybe a bigger sell down and break. But ultimately, right now, we're really watching this 127 to see where it heads from there. So that is what I pretty much have. So didn't want to make this video too long. Again, there's a lot of information what's currently out there. You have to, at this point, what we're looking for, yes, we have another monetary policy. Yes, we have government shutdown. Like I said, isn't going to have a big impact other than the fact that we might not be able to get the data that we want. Maybe that's strategically placed so we don't get data, maybe because it could be really shocking going into Christmas. And then everything, we'll just push everything off till next year. Could be a possibility. I don't know. But again, we'll see, or they can just come up with some sort of solution that pushes it out to the new year, which is a more likelier possibility. So at this point, what we're really looking for is non-farms next month, and we are essentially just in a happy zone right now. So there's no bad news or anything. So if we don't get any headline news between now and the next scheduled event, which is the next non-farms in December, we're going to have 3 weeks of just nothing, and the market may try to run up. So unless there's headline news, ain't nothing going to happen. So unless we get our downgrades or anything like that, nothing's going to happen. And I could see us rallying up until the end of the year. And then again, just postpone a potential crash or whatever scenario at some time around that February, March time period next year. Again, that puts us a lot closer to the Bitcoin halving. Maybe there's an approval in November that pushes Bitcoin up and the market rallies with Bitcoin to the back half of the year. Could be a strong possibility, but we have to, again, see how this week plays out. So with all that being said, if you made this far, go ahead and drop a like. And until next time, I'll see you guys later.